Sanjay Gaglani, CIO of Silverdale Capital, joins us right now on the show from Singapore. Sanjay, good having you. Thanks so much for joining in. What's your view on the impact of the US QE taper and the interest rates on INR and the debt flows?
The US tapering news has already been observed by the market. So if you look in terms of the correlation between the US taper and the emerging markets, the truth is this: the correlation is marginally negative. So I do not see that to be a big issue per se. Yes, it does have sentimental value. We should also keep in mind that while the US tapering is happening, we also have the liberation or expansion happening by the Japanese government, and we also see easy policies in Europe. So on the balance, I think it's a question of relative returns rather than one of tapering or non-tapering effect.
Hi, morning. India currently has about two risks: election as well as the risk of, El Nino event. How would you play and prepare for these risks in the context of sector allocation in India?
See, elections are part and parcel of democracy. So when we are investing in emerging markets, we take that into cognizance in terms of our strategy. So rather than being disturbed or being taken by flight by the elections, we are love to be more sanguine about the whole thing. Our strategy continues to be stock specific in the emerging markets because we believe that the index does not reflect the GDP in various emerging economies, including India. Coming to the El Nino effect, yes, we are cognizant of it, and we would take corrective steps as and when the things unfold. Right now, the good and bad news of the Indian stock market is we do not have a classical agriculture play in terms of where we will have a maximum impact. In terms of consumer goods, there are many other factors than El Nino which are coming into play.
Okay. Do you see IT, pharma and healthcare segments performing well in FY15 as well?
We believe that they would continue to be defensive sectors. Indian IT story is far from over. We see a lot of value in most of the companies across. In particular, in IT, we like TCS, we like HCL Technologies. Pharma story could be a story which could be competing with IT in terms of the opportunity available. In pharma, we of course like Divi's Lab, we like Natco Pharma. Sun Pharma looks to be an interesting bet, and I would suggest the investors to take the benefit of the merger with Ranbaxy and the FNOs and the ARB available in the market.
Right, and banking and capital goods sector has been, seeing a good run up. How will you play banking in NBFC stocks, and also would you be bullish on the capital goods space?
We would be slightly more cautious in these sectors. We do not think the stock market has fully discounted the non-performing assets which are held by the Indian banks. We do appreciate and understand that in case of upturn of the economic cycle, and which we believe that we are close to bottoming out, banking is a good sector to play with. But given the inherent NPAs sector, we will be very careful. Add to it the fact that the Indian public sector banks require huge amount of capitalization, and therefore the equity dilution in coming days. Coming to capital goods, I think it's a bit too early to bet upon those things. We would, of course, keep them under watch.
And before we let you go, your consumption and infra demand has seen a beating. How would you play on the consumption and infra-related stocks?
Infra is more policy-led. So we hope that the new government would be more proactive, and we would see certain initiatives being taken by the government to kickstart the infrastructure sector. Of course, it has certain amount of structural issues, and when I talk structural issues, I'm not only talking in terms of the environmental issues or clearances issues, etc. out there, but also in terms of how the funding for these projects are being done. In terms of multi-layer funding, which is pretty often in India, where the construction companies give the toll, and toll company gives the construction contract inter se. India also has issues because India doesn't have a sovereign curve. So for people to raise long-term money is an issue. So those are things which need to be taken care of in terms of infrastructure things. Having said that, coming to the consumption portion of it, we believe that the the employment guarantee scheme was a fantastic scheme, but very ill administered, which has created pockets of wage inflation in rural India, and which has in turn led to shrinkage of labor pools. So there are a lot of infrastructure issues in terms of consumption which also have to be taken care of before we could be very bullish on those sectors.